Hi, and welcome again to another edition of Market Analysis for today, June 27th of 2024. I'm Giovanni Benacourt, analyst, trader, and educator with Vantage Markets, and this is a recording previous to the opening session of the United States markets. All right, well, political junkies are well prepared for plenty of finger pointing at the presidential debate today, including on inflation. For years after COVID-19 and the pandemic response ushered consumer prices to a generational high, inflation remains a bigger economic worry than growth. That's a problem for everyone. It's a problem for President Joe Biden, who may struggle to dodge former President Donald Trump's economic blame game. It's a problem for many outside the U.S. too. The difference between monetary policy set in Washington, D.C. and Tokyo has wreaked havoc on the Japanese yen, which this week fell near 40-year lows against the US dollar. And it could soon be a bigger problem for investors. Those swept up in the astonishing outperformance from Nvidia and other tech stocks risk underplaying another dominant force in markets: the outlook for inflation and the Federal Reserve's decisions on interest rates. Q Friday's release of data covering the core personal consumption expenditure price index, which is the Fed's preferred measure of inflation. The risks are still skewed toward the inflationary signs of spiking prices, pushback rate cuts, bets more than indication of slowing growth pull them forward. Anemic housing data this week were met with mostly a shrug because inflation is a bigger problem than growth. Traders are still betting on a rate reduction as early as September, with the odds of a cut by December nearing a certainty. Now, Fed Governor Michelle Obama said this week that she too doesn't expect rate cuts this year. And Australia may be a cautionary tale, with the country's consumer price index spiking this week and raising the prospect that another rate hike is needed down under. In the U.S., investors risk becoming complacent with hopes for rate cuts. So everyone wants rate cuts, but I don't see them coming. And with that being said, let's take a look at what we could probably, or let's speculate on what sort of a market fluctuation we can expect today in the indices. Let's begin with the NASDAQ. Okay. NASDAQ being populated. Here we go. All right. So taking a look at this chart, okay, a daily candlestick chart. And if we want to take a long measurement from, let's say, from April low, we've seen that the market has been on a consistent uptrend. If I could draw that line a bit better. See that? Okay. So we have been in a consistent uptrend. Now, the consensus of the market looking for new highs to reach this particular high that was created on June 20th, just last week. So will we reach that again? Will we come back towards it again? Given the effect, obviously, that we've been seeing so far, a correction was expected. That correction happened, obviously. Now, was it more than we anticipated? If we give the high, we grab that high is 20,369. And we say that a correction, a normal correction could be 2%, right? So minus times 2% minus 407.38, it should give us 19,961. So 19,961 has already been met. You see that? Actually, it was met right after making that high. If you see that. Okay, from here, it continued to uptrend lower, which it made a double bottom this week. And from here, it kind of rebounded and looking to continue this upward trajectory. But it has, I'm looking at it that you see this particular scenario here that passed before the market opened with a gap up and created that all-time high, that new all-time high. Well, we kind of seeing it right at the same level. Okay, you see that? So I'm gonna use just better some horizontal lines so we can see this better. So I'm gonna use that. Let's just clone this puppy. And we can just use the width of the candles. So we use basically around that same area, okay, where we were before. So what I'm getting at is that since this was a previous level of resistance, which when this close above it, it became a level of support. Now the market is below it or right around there, looking at as a resistance. So will the history repeat itself and make another move to the upside, or will this just be another indication that we could probably just trend lower? I'm looking at it more like I think it's going to trade sideways for now. RSI is basically already entering overbought territory, so we will need a catalyst to bring it out of this scenario. Yesterday's Nvidia's announcements, it didn't really make that much movement at the beginning. It did, but then the Nasdaq closed in the red. So what can we say about it today? Again, I'm looking at this to be a choppy market today, so I wouldn't be trading it today. That's for the Nasdaq. For the S&P 500, let's take a look at it. So the S&P is actually, again, within yesterday's range, basically doing the same low wick. Let's see if it'll pop and trade up towards the resistance, and again retreat it. We are in the overbought territory in the RSI, so keep that in mind. Again, I wouldn't be trading the indices. Then we have the Dow. The Dow also again is within range, within yesterday's range. So I'm speculating for it to also do a very similar fluctuation. So again, all three markets just sideways trading for me today. So that's a bad recipe for failure. And then we have crude oil. Crude oil, on the other hand, has had a momentum. Okay, even though yesterday we are with the highest week of yesterday, it did retreat it, but it closed in the green. So today, let's see if we will have a nice little push to the upside and come towards our $82 and change resistance level and trade above that. Let's see that I'm cautiously bullish with crude oil. Nat Gas. Let's take a look at Nat Gas. So Nat Gas, in the red, right around the level of support. So let's bring that down to 250, and my resistance is going to be basically where it opened yesterday. So continue with the momentum selling Nat Gas. Gold yesterday fluctuated below. Actually, it broke our level of support because it closed below it. So we need to bring that down. So I'm going to bring that to the lower Bollinger Band. And it's looking to recuperate itself today. So let's see, the medium of the Bollinger Band is going to be acting as a resistance, dynamic resistance level for it. Let's see if it'll trade to the medium. Trade to the mean. All right, then silver. Same token for silver. Yesterday, it opened today with a gap down. Okay, it did fluctuate. It's fluctuating strongly to the upside. I will be in favor of entering long once the RSI has crossed the 50 marker. So once it crosses in here, that tells me that some momentum are being built up. And obviously, if that by that time that it peaks above 50, will we be already at this level of resistance? And let's see if or if it has already filtered above it and done a throwback towards it and perhaps move to the upside. So I'll be waiting for that confirmation, if you will. Copper. So we have copper here. The same token for copper, within yesterday's range. So, but I will say that I'll be cautiously bullish with copper, taking some positions long in copper. Bitcoin, well, Bitcoin yesterday just really traded towards the middle of the previous day's range. Today has looking to rebound. It has created a double bottom from here, so this could probably be a nice little trade. 62,000 will be the marker for it, initial level of resistance. The currencies are looking to sustain themselves north of 107, recuperate themselves for the euro at least, after having such a red day previous day. So nice recovery above 107. So let's see if it'll push towards a 107.5. And let's take a look at the pound. Will the pound be also doing the same scenarios as the euro? And indeed it is. So 127 is a target, and that could happen as we continue to see the dollar index is retreating from pushing higher, reaching that resistance level, and has bounced off of it. So let's see how much lower would it come. Would it come down to 105? If that's the case, then we'll receive a nice pop on the currencies and metals. Thank you for watching, and I'll see you tomorrow.